Aaron Gibbs, one stock you like for your quantitative portfolio is IBM. Clearly, everyone's watching Ginny Rometty and what she's doing there. A lot of problems. Maybe she should ask Watson what to do. What do you think she should do?
So they're actually doing a pretty good job at slowly shifting from a lot of the legacy issues into more of the cloud, mobile services. And we are starting to see some growth. However, with revenues, it's definitely going to be a long turnaround. Where they're really making their money over the next couple of years is cutting their margins, cutting costs. They made a lot of news early in February with their Project Chrome that is probably going to be one of the biggest layoffs and biggest reorganization. We think that this kind of commitment, though always hard to hear about layoffs, is really something where we're going to see this turnaround from IBM. It's trading at really attractive multiples. You've got a good dividend yield, and they bought back over 8% of their shares last year. You've got a really nice buyback yield from them. So overall, it's still early in this turnaround story, but we see it as a really good value and a very profitable company.
And you also see CenturyLink as a value, pays a nice dividend yield around 5.5%. But tell me about the underlying business.
Okay, so CenturyLink is another turnaround story, another value. And basically, CenturyLink was an old school telecom. And so as we use less phone lines, their revenue started going down. But they're also in this turnaround business. They've been transferring to a lot of broadband. They have a new TV service called Prism TV, and that's really where we're seeing the growth. But every year, they're losing more and more phone customers. Those revenues need to be replaced by the new, and they're going through that turnaround, but extremely attractive multiples right now. You get 5.5% just in dividend yields alone, and they're also very aggressive about their buybacks because they see their stock as a value too. So overall, we see them really executing on the turnaround story, changing to a more modern, new age telecom type of company, and we see growth further on.
And then finally, you're a fan of the Gap, got a brand new CEO. But are the styles right there? Is the denim right? Do they have that?
Yeah, so Gap has been struggling for the past year, particularly with their Gap brands and their Banana Republic brands, which used to be their leaders. Right now, it's really all the growth is coming from Old Navy and their Athleta. So they're trying to turn around the Gap and the Banana. They have two new division managers, and particularly for Banana Republic, they hired Marissa Webb, and she's really made some waves even quite early on in New York Fashion Week just in this February. Banana Republic was mentioned frequently in the press, also for their styles, stylization, accessories, which is very unusual to have Banana Republic mentioned at all during New York Fashion Week. So we are seeing some turnaround. We are seeing them getting a little more in step already, and we think overall, again, good buybacks, very attractive profitability, and all around good value.
All right, thanks a lot, Aaron.
Thank you.
And thank you for watching The Street.